I don't personally think that macroeconomics is investing. I think it's speculation. And how you define speculation and investing are two very different things. But one way to think about it that I'm doing this a little bit on the fly, but one way to think about it, it would be something like that. I didn't calculate it exactly right, Vasilios, but yeah, something like that. So, the idea of risk parity is that you rebalance as the returns are coming in, and you assume that returns are linked to risk, but I don't think they necessarily are. But in any way, my point here is to introduce you to these concepts, not to do a long-winded sort of analysis of them. So anyway, let's go ahead in the discussion to kind of what is speculation and what is investing, and a lot of this is semantics, speculation and investing. But what I would say, speculation, you can define it as the attempt to profit on a security, let's say on the price change of a security or of an instrument. Let's just be very vague here, of an instrument which has no discernible no discernible fair value. So in other words, you cannot determine the fair value of some security. And a lot of the securities we're going to be talking about today, you actually cannot, in my opinion at least, really determine their actual fair value. I love, for some reason, I find it therapeutic to actually sit here and erase it like this as opposed to it feels so real. I'm kidding, of course. So things like the euro US dollar pair, or the USD EUR pair, there's no actual discernible fair value. You can't sit there and do a lot of calculations and a lot of diligence and say, I think this should be 130. It's more of a gut feel, and it's sort of like you're relying on different principles that are really speculative, in my opinion. There's certainly, and we'll talk about what those principles are, but I don't think they're discernible. Thanks for correcting the spelling. I'm not the best writer in the world. So in any event, that's sort of what I think speculation is, whereas what I think investing is the attempt, notice the word attempt, to profit on the price change of an instrument which has a reasonably, falsifiable, falsifiable and discernible fair value. You can sort of, falsifiable meaning you can scientifically determine its fair value without using sort of the voodoo, which I think is a little bit more voodoo, voodoo methods of sort of guesswork that you see in macro speculation, which again, I'm not here to insult them or debase them or whatever. I think that it's just your taste. I like the sort of scientific method of value investing. Some people like the speculative kind of psychological perception, and we'll talk about that in a minute. These are kind of what weigh in on this, whereas this is sort of calculating, diligencing. And it's all up to you. And you can argue that these two are a branch of the general concept of arbitrage. The idea is that you can determine the future price of something while the markets can't. Whether you're going to do that through investing or speculation, that's the idea. And we've spent a lot of time on how to do that in investing. How to calculate something and say, I think that's a good investment because I think I'm going to get paid higher than my discount rate, etc. Whereas in speculation, you're sort of doing the same, but it's through a little bit of a different methodology. But either way, you're trying to make money, which is sort of what arbitrage is. You think that, say, euro dollars at $1.10 and should be $1.30, and you're going to make that 20% by speculating. Whereas investing is sort of the same. You see a common stock for $10, you think it's worth $50. You're going to arbitrage by making an investment that's calculating and diligent. So that's sort of one way to do it. All right. So what kind of things that we have to look at in macro? Maybe we should start by discussing the actual instruments that you can trade, and then we'll work our way backwards and talk about what it is that you're going to look at when you're trading those things. So in general, when people talk about macro, they spend a lot of time talking about currency, or sometimes we call it FX, foreign exchange. That is a big sort of, there'll be time to interact with me later. If you want to call me an idiot, you can actually call me, and we'll do a Q&A in probably about 30 minutes. So you're more than welcome to articulate your brilliant hypothesis later. So currency and foreign exchange is a very sort of simple, simple thing. People speculate on the value of currencies. Here's the British pound. You can see this dramatic drop after Brexit. The pound is conventionally quoted in the number of pound. Let's see. It's actually. Here, it's the price of £1 in dollars. So you can see that it took $1.50 to buy 1 pound, and that dropped dramatically. In other words, the dollar strengthened to the point where it's now $1.33, and you can see that the currency hasn't recovered from Brexit. It was a huge drop. If you look at the historical return histogram, 1 sigma is 1%. So the idea that this currency dropped quite a bit more, about 10%. That was a 10 sigma event. A 10 sigma event, which is really telling. A 10 sigma event should never happen. If you know anything about statistics, a 10 sigma event should actually never ever happen, right? But it wasn't temporary. You can see the pound drop was permanent. I don't know what looks temporary. Temporary would be what happened to the Swiss franc. The Swiss franc had a huge temporary drop here, or move here on the Swiss bank saying they won't peg, and it actually went right back. So a lot of people went out of business on the Swiss franc situation. So currencies are basic currency pairs, where you have one currency against the value of another currency. And you can do this in baskets as well. You could say, well, I'm going to bet the US dollar will appreciate or depreciate against a basket of currencies. You call up your broker and say, I'm going to look at emerging market currencies like the Thai baht, or I don't know, several currencies like that. You could pick any currency. There's some currencies that are barely tradable. Last year I was trying to put on a big trade for the Kazakhstan